Hi, everyone. Welcome to this week's edition of What's Driving Token Prices. I'm your host, Katie Talati, Director of Research at Arca. For those of us joining us for the first time, I'm responsible for identifying and analyzing digital asset and blockchain opportunities for Arca's funds. As part of our research, my team and I examine token prices and the market events that act as catalysts for price change. Based on our research and market events over the past week, here are some notable token price movements and what we think drove these moves. As a reminder, before we get started, this commentary is not intended to be investment advice, investment research, or an investment recommendation. Please consult your investment professional for your own circumstances. So we're going to get started this week with actually some good bridge-related news, which is definitely different since I think I've talked about all the major bridge hacks recently, including Solana's Wormhole, the Nomad Bridge on Moonbeam, the Ronin Bridge on Axie. But today I have good bridge news. So Near, which is a layer 1 blockchain, their Rainbow Bridge actually managed to thwart hackers attempting to exploit the bridge by using a block with false information. So the Rainbow Bridge, which has about 2 billion in assets across Near, Rainbow, and Ethereum, relies on a set of decentralized validators to decide if blocks are valid or not. So in this case, the hackers actually were really trying to exploit this. They performed the hack on a Sunday early morning, thinking no one will be around. But because of this decentralized validator network, there were validators in different countries and time zones. So and incredibly, actually, the hacker sent through a block that actually had 5 ETH in it as a way to kind of essentially trick the validators. I won't get into the technical specs, but the validators were able to decide within 30 seconds that the block was false and reject it. And they were able to even seize the deposit of the 5 ETH made by the hacker. So hacker definitely got burned. They lost 5 ETH, and the Rainbow Bridge stood up to the hack test, at least for now. So like I said, definitely exciting because we've talked about a lot of bridge hacks on here, and it's been definitely a big news headline the last few months. Despite this, Near end of the week down 13%. All right, so MakerDAO, the decentralized stablecoin issuer and lend borrow protocol, announced it's going to be pioneering the first commercial loan between a US regulated financial institution and a DeFi project. This is actually really cool. A lot of people probably don't realize it. So a governance loan, or as a governance proposal, was passed for the loan a few weeks ago, but it was initiated just yesterday. So Huntington Valley Bank is the regulated financial institution. So they're basically a bank. They initiated a $100 million loan via Maker, and they're going to use this to fund existing and new loans to the bank's business. This is going to be the largest facility in which real-world assets, shorthand is RWA, if you see that on Twitter, are used as collateral within MakerDAO's ecosystem. And this, like I said, is really considered a huge first step with connecting DeFi with traditional markets. So one thing that my team and I are always looking at or thinking about is how does DeFi kind of grow into that next phase of adoption? And we definitely keep coming up again and again saying integration of real world assets is absolutely necessary for this to happen. So we're really excited to see that Maker is kind of on the forefront of this and working with these regulated financial institutions to get them to use these tools. So yeah, exciting to see what else is to come from this. And I'm sure we'll have similar announcements in the future. With that said, Maker was down 8.6%. Cool. So next we have Jewel, which is the governance token for the blockchain-based game called DeFi Kingdoms. So DeFi Kingdoms announced last week that it was going to be migrating from the Harmony blockchain, ticker symbol 1ONE, to Clayton, which is now a metaverse-focused layer 1. Clayton does not currently have a token, I don't believe. So DeFi Kingdoms also has a presence on an Avalanche subnet, which is a whole different layer 1, but they were kind of straddling the two for a while. So they're actually going to leave the Harmony blockchain completely. This isn't an expansion. Unlike before, they were expanding Avalanche. Now they're just saying we're done with Harmony. The migration actually comes a couple months after the Horizon bridge for Harmony, surprise, another bridge, was exploited for $100 million, causing many DeFi Kingdoms players to lose assets. So basically, since this, and in addition to a bunch of other technical issues with scaling the Harmony blockchain for the heavy usage that DeFi Kingdoms was seeing, DeFi Kingdoms has actually been searching for a new layer one blockchain for a good amount of time. That, like I said, they have seen a lot of activity. They have around 55,000 monthly active users. So this was pretty important for them to make sure that the experience was good for them. So following the announcement, the Harmony blockchain, or the one token, actually declined 19%, and while Jewel only dropped 11% for the week. Last but not least, we have Tribe DAO, which you've probably seen some stuff about it on Twitter if you're looking. But for those of you who have not, Tribe DAO is it's a DAO. It's the project behind something called the Fae stablecoin. They announced earlier this week, or last week, sorry, that they're going to wind down operations and return DAO assets along with the Fae protocol controlled assets to token holders. So I'm going to explain that out a little more actually. So Tribe DAO was basically a DAO collective. They were trying to just own and operate different DeFi projects, part of the DeFi 2.0, crowd from last year. And there was a project with them called created by Fae Labs, was the Fae stablecoin. Fae was essentially backed by a basket of assets, kind of over collateralized. It was an algorithmic stablecoin, but had more than one-to-one backing. I'm not sure what the actual collateral ratio was. But the assets that were deposited in return for the Fae stablecoin were called protocol controlled value, or PCV. So basically, between the excess PCV for the Fae stablecoin, along with assets that Tribe DAO owns, the assets in the DAO are worth more than the market cap of the Tribe token. So as a result, that token has now traded up on the news. But just to give you guys some more context, Tribe and Fae have just kind of faced a rout of bad luck. Earlier this year, a project that they acquired, Grari, actually was hacked for $80 million. Originally, the community said they wanted to pay back the hack, but then later re-enged on that deal. It's been a lot of back and forth, and a lot of hack victims have felt burned. And the project has just kind of been unable to make progress. So basically, this, coupled with the uncertain landscape surrounding algorithmic stablecoins, the Tribe team decided to just shut down operations instead of trying to continue on. So like I said, everybody online, if you want to take a look, has been doing some math around the book value play of what the Tribe and Fae assets are worth and what the token is potentially worth. So some of the estimates I've seen are around 29-30 cents. It really just depends on how governance plays out. As a result of this, the Tribe token did trade up 58% on the week, specifically around this news of liquidation. Probably will be a few months until the actual liquidation happens, but definitely interesting event to watch. All right, that's all I have for you guys this week. Thanks for joining. I hope you enjoyed our insights. Tune in here again next Wednesday at 1 p.m. Pacific to hear what's driving token prices.